Welcome back to Bazaar Morning Call. Plenty of stocks to talk about, but I think top of mind will definitely be HUL and ITC. So our resident expert is here. Mangalam joins in first up. Mangalam, how do the numbers look?
Well, for HUL, or rather all consumer companies this time around who have reported, two trends really stand out. One, there has been a slight miss on the top line for all the companies, but there has been a better than expected jump in the operational performance as well. HUL was no different. Revenues coming in just below 15,300. The street was working with a number above 15,300, but the EBITDA came in closer to 3,700 crores, and this compares with expectations of 3,600 crores, and the net profit was also above expectations. What's good about HUL's numbers this time around is a 700 basis points jumps that we've seen in the company's gross margins. And EBITDA margins have actually been better than expectations despite the company increasing their ad spends. Ad spends compared to last year are up by 65%, and as a percentage of sales, they're up by 400 basis points as well. What's not so good, however, is the volume growth. That came in at just 2% versus expected 3 to 4%, and the management also sees only a gradual recovery in the rural business in a high competitive intense environment. But going forward, with the second half of this year having some festive push as well, we can see a bit of a positivity, largely because the stock also is down about 8 to 10% from its 52-week high. Expect a wee bit of a bounce on HUL today.
Okay, all right, Mangalam got that on HUL. What about ITC? Kept you up late last evening. How was it?
Well, it didn't keep me up late last evening, largely because I was also watching the match on the side. But as far as the ITC stock, the numbers are concerned, there has been a miss if you look at the reported numbers. Revenue, EBITDA, as well as net profit. The net profit has been in line, largely aided by other income. But that miss is mainly on account of non-core businesses. The core businesses, all of them have been extremely good. If you look at the cigarette business, volumes grew by around 6 to 7%, as against street expectations of 5 to 6%. The FMCG business grew by about 8%, but then again, all the other companies showed a slight miss in the FMCG top line as well. The EBIT in the FMCG business grew by about 37%. There was margin expansion, and hotels, that did extremely well. Remember, the previous quarter had the G20 summit as well. So on expectations of 15% growth, the hotel business revenue grew by about 21%. The weakness was mainly in the paper business that showed a 10% decline in revenues and 50% decline in EBIT. I see a wee bit of green on ITC as well, mainly because the stock has corrected about 10% from its highs.
All right, thanks a lot for that. Well, let's go across to Surbhi now. She's tracking United Breweries this morning. Surbhi, how does it look?
So it was a mixed bag. The revenues were above expectations, but it was a margin miss. The revenues grew 12% on a year-on-year basis. The gross profit margins, that came in at 44.5%. It improved sequentially, though, but down around 200 basis points on a year-on-year basis, and that was on expected lines. The EBITDA was down 16%, and the margins came in at 9.8%. Our expectations was around 11%, and that was largely because of higher OPEX spends. Now, the volume growth, that was largely in line with estimates, volume growth of 7%. And that too in a seasonally weak quarter. The premium segment volume growth, that was strong, came in at 10%. Now, there's a con call today, so we'll watch out for the commentary on the OPEX cost front and also, the gross margin trajectory going forward. But going with red for now.
Okay, thanks very much, Surbhi, for that. It's a tech-heavy day. I mean, in terms of the managements you will hear over the next 2 hours, as well as a lot of tech. Rima is here. We're going to talk about Mphasis and Tata Communications to begin with. Rima.
Thanks so much for that. So let me start with Mphasis, where revenue growth has not picked up versus street expectations of a pickup, and 2, the order book has slowed down, the order wins. So starting with the top line, the company has reported flat revenues on a sequential basis. Street was expecting a growth. In fact, even the management commentary in Q1 is that growth in Q2 will be better than Q1. It will pick up, but that doesn't seem to have played out. The total contract value, or the deal wins as they're called, have also been the slowest that we've seen in the last couple of quarters. That said, the management does say we're seeing signs of bottoming out thanks to the stability in mortgage and visibility to growth given the sustained pipeline expansion and contract closures that are starting to gain momentum. Tata Communication, well, on the numbers per se, it's a mixed bag. Revenue slightly ahead of street expectation. Margins, though, are lower. Margins have fallen for the company, and they have been under pressure for the last few quarters because of the acquisitions that they did. The Switch acquisition got consolidated. There was M&A costs, integration-related costs, and therefore the margins fell on a quarter-on-quarter basis. And the second disappointing thing is the data revenue growth appears to have slowed down. In this quarter, the company's organic data revenue growth has come in at 10%, slower than the 14% that we had in the prior quarter. So I'm going to go with red for both of them. Back to you.
Okay, and keep in mind that you'll be hearing from both the managements Tata Communications in a short while from now, and later on in the show, we'll have the management of Mphasis as well. Will be joining in at around 9:50 a.m. But let's go back to Mangalam. Mangalam, you're tracking Metro Brands as well as Zomato. Tell us more.
Yes, Metro Brands reported their numbers. The revenues, picked up. The growth in the revenues picked up to close to around 17% in this quarter. Yes, there was a mild moderation in gross margins, and that weighed on the EBITDA margins of the company as well. But nothing really to worry. The net profit was down by about 13%, but that's largely because of Cravertex brands, which is the Fila brands that they own. And as a result of which, there was a 14 crore loss in this quarter as well. See a wee bit of green on that one. But importantly, the company's appointed Mithun Sancheti, who is the founder of Carrot Lane, on the board. See green on Metro Brands, but red on Zomato, largely because sources tell our colleagues that SVF Growth Singapore may sell about 1.1% stake in the company, and they will do that at a discount of anywhere between 0 to 2% of the current market price. As of last holding, SVF Global held about 2.17% stake in the company. So important to know whether this is just one of the trades or they will go ahead and do a clean out trade in the near future as well.
Okay, thanks a lot for that. Well, Surbhi is back with us to talk about Havels and Voltas. Why are you watching those, Surbhi?
So, Havels, it was a disappointing set of numbers. The revenue growth was only 6%. The gross profit margin expansion was 240 basis points, which led to the EBITDA growth of 30%. Margins came in at 9.6%. Now, internally, if you look, the revenue growth across segments was weak. Cable segment grew only 6% on a year-on-year basis, whereas yesterday we saw Polycab, which reported a domestic business growth of over 30%. Lloyd, a revenue growth of 18%, but losses continue to expand in that segment. And the other segments as well, lighting, electricals and switch gears, all the revenues was in single-digit growth. The valuation tools are expensive over there at 50 times FY25 PE. For Voltas, it was a mixed bag again. The revenue growth was good, 30% on a year-on-year basis. Gross profit was sustained at 24.5%, but the EBITDA was down 30% due to higher other expenses, which were up 92%. Internally, the room AC segment, that did well in a seasonally weak quarter, that too. Revenue growth of 15% and margins of 7.7%. But the EMP segment, that's where the losses have continued to expand, and they've reported 4 consecutive quarters of losses in the EMP segment, and that is why going with a red for Voltas.
Okay, thanks a lot for that, Surbhi. Well, I'm looking at Jindal Stainless. The stock has corrected 15% from the recent peak, and the numbers are pretty much in line, so maybe the stock opens up flattish to mildly positive. Let's run it through the numbers. Top line a little bit lower because volumes are a little bit lower. EBITDA number pattern line, but since the top line is a little bit low and the EBITDA number is in line, the margins look better. The profit number got a bit of a bump up because of other income. The other important factors to track, the reason that the top line was a little bit lower is because on a sequential basis, volumes are down by close to around 1%. And the export market seems to be facing some pressure because exports as a percentage of the total sales volumes have come down to around 13%. In the first quarter, it was close to around 17%. The standalone EBITDA per ton as well came in at around 19,700 rupees. The management has been guiding from this band of around 19,000 to around 21,000 odd. So it's an improvement year on year, but on a sequential basis, a little bit lower. The net debt number has come down. Now, I'm talking about the net debt. I'm talking about the consolidated entity plus JUSL. So, that's come down to around 4,551 odd. And in terms of other good news, well, they've declared a dividend. Remember, this is a company that didn't declare dividend for many, many years. But in the last 3 quarters, they've declared a rupee apiece. So that is, well, fairly good.
Okay, well, let's do a quick recap of our top stocks. Stocks with positive news flow, there's HUL, ITC, Metro Brands and Jindal Stainless. While stocks with negative news flow, United Breweries, Mphasis, Tata Communications, Zomato, Havels as well as Voltas. Let's take a short break. On the other side, we'll be joined by market expert Hemang Jani for some fundamental stock analysis. We'll also connect with Amur S. Lakshminarayanan, who's the Managing Director and CEO at Tata Communications, to discuss their Q2 performance. Stay tuned.